Building credit is crucial for new business owners, not simply for personal finance reasons. It takes more than just being able to obtain finance when you need it to build your company's credit. Your capacity to fulfill your company's duties has an impact on a variety of factors, including the suppliers you can work with and the caliber of talent you can hire for your staff. So, before starting the video, please like and subscribe to my channel for future updates. Also, click the link below to download a free ebook from my mentor, Jeff Lerner. Today's video is about top 10 tips for establishing business credit. 10. Know the factors that impact business credit. Building company credit entails establishing a history of responsible financial behavior, such as repaying your creditors and keeping your debt levels moderate. When you apply for business credit, such as a line of credit, business credit card, or loan, lenders assess reliability, whether you have a history of timely or early creditor payments, capital put up, how much the business owner has put into it. A higher investment could be seen as a greater dedication to the success of the company. Credit capacity, the company's capacity to pay creditors back. Strong personal credit. Business owners may find it simpler to obtain credit for their company if they have a high personal credit score and assets that may be used as collateral. 9. Create and uphold vendor credit. Working with vendors who do offers the chance to strengthen business credit, even though not all of them submit credit report information to credit bureaus. You might be able to open a Net 30 account with some vendors, which can help you establish company credit and better manage your cash flow. With Net 30 accounts, you can postpone supplier payments up to 30 days, giving you time to collect money from clients before paying suppliers. By doing this, it becomes simpler to monitor the money coming into and going out of your company while still fulfilling your obligations to suppliers. Net 30 accounts show that your suppliers frequently provide you credit. Therefore, every payment is a chance to establish your credit history. 8. Pay bills promptly or in whole. The ability to make payments is essential for establishing personal credit, and company credit is no different. Lenders will be reassured that your company can manage cash flow well, has enough cash on hand to cover its obligations, and has a track record of dependability paying creditors if you pay your invoices early or on time, including all applicable taxes. If you have Net of 30 accounts for your company, paying on time or perhaps earlier helps build a solid credit history over time. On the other hand, missed or late payments could be a sign of financial difficulty and hurt your company's credit rating. In addition to improving your credit, paying bills early may also have other benefits. Vendors may provide discounts for paying in advance or grant you access to longer payment terms like Net 45 or Net 60 accounts as your relationship develops. 7. Keep your credit card usage modest. When determining the financial health of an organization, lenders also look at credit use. The amount of available credit that the company actually uses is indicated by the credit usage ratio. A corporation would have a credit usage ratio of 25% if it used $2,500 of its $10,000 in available credit. A low credit utilization ratio suggests that a company is managing its cash flow well because it means that just a small portion of the credit it has access to has been used. A high ratio, which happens when a company uses a greater percentage of its available credit, indicates that the company might be experiencing financial difficulties. Small firms should generally strive to keep their credit utilization percentage under 10%. The business credit utilization starts to have negative effect on your score if it hits 30% or higher. 6. Keep an eye on your company's credit report. Maintaining good company credit is essential to building a healthy credit history. You can determine the strength of your credit, learn how to best enhance it, and spot any mistakes that might be adversely influencing your credit score by routinely reviewing your business credit report. You may track your credit report and score through two major credit bureaus that create company credit reports. Credit Signal by Dun & Bradstreet. Business Credit Report by Experian. What can be found on each business credit report is information that can be used to identify your company, including ownership details, government registration details, and more. Credit lines that the company has. History of payments and collections. Public documents that are relevant. Although these are not a part of your credit report, certain reporting agencies may additionally disclose your business's credit score. By regularly checking your company credit report, you may spot potential problems early and keep tabs on how your credit history is developing. If you discover differences, gather evidence. Well, do you like what you're seeing so far? Don't forget to like and subscribe. Keep watching because you don't want to miss what we have at the #1 spot. And remember to click and download the free ebook below. 5. Acquire an EIN. A business's EIN is essentially its Social Security number. It's necessary to open a business bank account in the name of the corporation or LLC and to include it on federal tax filings. Many larger firms additionally need an EIN from their vendors in order to pay them for the services they offer in accordance with the IRS regulations. 4. Establish a business bank account. Separating your personal and corporate finances is crucial for establishing business credit, as well as for good financial management in general, as we said above. Opening a company bank account is essential to separating professional and personal costs, along with selecting your business entity. By opening this account, you make it simple for business credit bureaus to track the money you take out of and put into your company. They will then record this information on your company's credit report. As a result, after you have an EIN, you should research your alternatives to open the finest business checking account for your organization. Of course, it's crucial to use your account once you've opened it. Everything from utilities and rent to your company's cell phone should be paid for using this bank account exclusively for business purposes. As long as you always pay your bills in full and on schedule, these purchases can also help establish business credit. 3. Establish a dedicated business address and phone number. Getting a distinct business address and phone number, even if it can seem like a straightforward step, will confirm your company's independent existence. Having this will enable you to register with business directories, which is a modest but crucial step in developing business credit. In order to register with directories like the Better Business Bureau, YP.com, and Angie's List, a company must have an address and a phone number. It's crucial to have accurate and consistent contact information posted on all of the well-known directories because business credit reporting organizations use these directories to gather information. 2. Apply for a Business Data Universal Number system number. In actuality, suppliers and creditors frequently use the Paydex score for business credit. Therefore, it's a good idea to open a credit file with this agency if you wish to establish company credit. You must sign up for a DUNS, a Data Universal Number System, in order to do that. The DUNS system is a method of numerically identifying business entities. A special 9-digit code will be given to you once you've applied for one. It costs nothing to complete the process, which can be done online at the Dun & Bradstreet website, although it could take up to 30 days to get your DUNS number. 1. Create a business entity account. Your corporate credit history is distinct from your personal credit history, as we previously described. Therefore, keeping your personal and corporate finances separate is the first step in beginning to create business credit. So you'll need to create a recognized business entity in order to segregate these finances. In terms of beginning a firm and handling paperwork, unincorporated business entities like a general partnership or sole proprietorship are the most straightforward. However, under these arrangements, the owner of the company are not legally or financially separable. In this situation, you'll need to supply your personal Social Security number if you decide to deal with a vendor or ask for a loan. Your business account activity will therefore appear on your personal credit record. You should pick one of the following structures if you wish to establish company credit. C Corporation. A C Corporation creates a legal and financial separation between your company and you. A C Corporation is the best choice for a company that intends to use stock or go public in the future because corporations are regarded as separate legal entities. S Corporation. S-corps are pass-through entities in which only individual taxpayers are subject to tax on business profits. S-corps are regarded as distinct legal entities as well. Limited Liability Company. An LLC is a different kind of business entity that is incorporated and provides liability protection, as well as financial segregation between you and your company. Compared to a corporation, an LLC is simpler to run and provides more tax flexibility. Partnership with limited liability. An LLP is a type of registered business entity that is common in the legal and medical professions. So that's it for today's video. What do you think of our video? Hit us up in the comments and let's chat. Don't forget to like, subscribe, and turn on the notifications for our channel so you never miss what's coming next from us. Download the ebook to learn more. Thanks for watching.